July 22nd, 2023. Coming into the day, we had a big gap up. And in general, when you have a big gap up, you should look for some sort of second leg up on the open. So I think this was the second leg up that we got. We ended up getting, we got the gap up and then a little bit of follow through. But again, you can think of this gap, instead of just looking at it and seeing a gap, you can just imagine it's a bull bar. It's treated the same way. So a big gap up like this can be treated as a surprise. And the market will often do this, where for a couple days you're kind of looking for a reasonable bounce, and then it'll get a big gap up, and it's not really tradable. And that happens sometimes, but generally, most traders were expecting some sort of rally today, and that's one of the reasons why we got a gap up. One of the problems with the gap is we're closing, or it's opening somewhere up here, and this is yesterday's high. So we're opening pretty close to yesterday's high. And if you look at yesterday was a bear bar. So you would have to imagine if we do get above yesterday's high, there's probably not going to be that many buyers. So I would say coming into the day, you should be looking for a second leg up. However, probably not as great to look for a bull trend from the open because we do have a resistance point right here. Bar one, a bear bar, but a big tail on the bottom. The bulls see the gap up, and this is a high one for them. So an inside bar, or not, sorry, not quite an inside bar. So I guess you suppose this would be follow through, right? Actually, not a high one. The bulls, what they would think is when you get the gap, this is the open of the day. And so if this was just a big bull bar, we trade above it on bar one. So bar one would be the follow through for the bull bar and not a high one buy. So not really worth buying above bar one either way. There's probably sellers above. We're really far above the moving average, and we're getting not above average bull price action. So it's really hard to want to buy up here when you're getting, basically a bear bar, and you have a really large gap up. There's a big tail on the bottom showing some buying pressure, but it's really not all that good. Bar two is follow through for the bulls. So we have a pretty good looking bull bar. It's not, it's not closing near its high or anything, but it's a bit of a bull surprise. It's bigger than the bears probably expected the bar to be. And you can see we're getting pretty close to yesterday's high. So a lot of traders might not sell till we get there. Generally, when you get this close to some sort of magnet, you're probably going to end up getting there. We're also at this point right around 5,600, which is a big round number. So this could be an area that we oscillate around a lot of the day. You can see we traded above and below it quite a few times. We also did something interesting today that's pretty rare, where we broke out above the 18 bar range, and then we broke out below it, and then we broke out back above it. It's a really rare pattern. It only happens a couple of times a year. Is it overly significant? Not really. It's just cool. It's just very unusual. It's really the main point, to go above, below, and then back above. Really unusual thing to happen. So bar three, an inside bar. The bears, it's a low one short. Had bar three closed on its low, I think it's credible to sell as a possible high of the day. You know that you have the gap up, and that's probably going to provide some sort of support, but you're still well above the moving average, so it's possible bulls give up until we get to the moving average. So had bar three closed on its low, it's reasonable to take the short below, taking a chance that we've seen the high of the day. Is it a high probability trade? No, you're only risking 6 points, and you're probably trying to make like 30. So it's probably only a 30% trade if it was to close on its low, but it's still a reasonable thing to do. You know that we're going to get back to the one high because the bears who sold above one after the big gap up, it's very unlikely that they're going to remain trapped. So after bar three, you can imagine that you don't know the path we're going to take to get back to the bar one high, but we are probably getting back to the bar one high. Bar four, another big bull bar. So it's a possible parabolic wedge if you think about it. Bar one, a big bull bar, or sorry, the gap is a big bull bar, and bar one is a pullback. Bar two is a bull bar, and then bar three is a pullback. And bar four is another bull bar, and then this is, essentially your sell signal. So it's one pullback, two pullback, three. So this is a parabolic wedge, essentially. What does that mean? It means we're probably not going to go straight up, but I think you can determine that just from the way these bars look. It's not good for the bulls that every time you get a big bull bar, you end up getting a disappointing bar right after it. And then bar five does something actually disappointing for the bears, and it trades below bar four. It's notable that we have a 4-bar micro channel to start the day. So this channel is also really tight. So the first reversal down might end up being minor. Bears were hoping to get a smaller bar, and that it closed on its low, and that it would be a credible sell for a possible high of the day. Instead, we traded below bar four, where bulls were able to buy. Because if you're a bear, you don't want to sell below a bull bar. You want to sell below a bear inside bar closing near its low. Instead, we traded below the bull bar. So what do the bulls do? they end up buying below the bar and they scalp out around a 50% pullback of the bar. So they scalp out in here. And, if you're buying below here, it is probably a scalp because we're so far above the moving average that the odds are we aren't just going to continue to rally. We're probably going to go more sideways. So you can see the bulls were pretty eager to get out. And I think that's a lot of what's causing six is bulls, they buy, they're hoping for at least a scalp to the upside and they're getting out. No one wants to buy above bar 5. It's a bear bar. And it's bad high 1 for the bulls. So no one really wants to buy up here, and it's not even a micro channel anymore. So since there's not really a lot of good reasons to buy up here, bears end up selling and bulls sell over their longs, and that's what's causing the big bear bar closing near its low on 6. Can you sell below 6? Yeah, I think so. It's a credible high of the day. The obvious problem with 6 is that your risk is really big. If you were to sell below 6, you would be risking almost 20 points, which means you have to trade small. Again, I think it's a reasonable thing to do to sell below 6 and look for it to be the possible low of the day, the possible high of the day. However, there is, one glaring issue with selling 6 and selling 7, obviously besides the big risk, in that I think that the bulls who buy below 1 and are willing to scale in lower are going to make money. And you can see on 8, 7, and 8. Well, I'll finish up with bar 6 first. So big bar closing near its low. Not really a great signal bar, but a big enough surprise that you can expect at least a second leg sideways to down. About 30% of the time, when the market gets a second leg sideways to down, it'll pull back all the way above the first leg, and then it'll get the second leg. And that's what we did here. We got the first leg down, then it pulled back all the way above the first leg, and then we got the second leg down. And that happens about 30% of the time. Usually 70% of the time, you'll get some sort of lower high, and then you'll get the second leg down from there. So 7, a bear bar closing near its low. We're clearly always in short. I would say that bar 6 made the market always in short, but I think bar 7 is confirmation that we are always in short. If we are in a trading range, usually when the market becomes always in short is when the market starts to reverse. So you have to keep that in mind. But if we are in a trend from the open, which is possible since we just got above, keep in mind the context of the daily chart. There were probably sellers above this high because it was, yesterday's high was a bear bar. Although we are somewhat due for a bit of a bounce on the daily chart, it's still logical to think there's going to be sellers above that high. So it's pretty reasonable to think that we've seen the high of the day at this point, maybe 60% chance. However, bar 7 closing near its low, and you can see we don't have any overlap with bar 1 low. So we went straight through the bar 1 low. But again, I think this is going to be a trading range open. Why? Well, there's the default reason of 80% of the time on the open, it's going to be a trading range open. So it's usually just better in general to bet on a trading range open, and on the open, look to buy small bars towards the bottom and sell small bars towards the top. So that is the default reason. But also, this was a pretty tight channel up, and I don't think we're just going to collapse straight down. We might. There's a reasonable enough chance that bears are going to get a strong second leg sideways to down. But I'm not sure what the pullback is going to look like. But again, back to my main point is even on the close of 7, I think the bulls who buy below bar 1 are going to end up making money. And so what do you do if you sold 6? Well, a lot of traders will look to scalp with 10 points. If you look, the low of this is 55.88.5, which means it needed to get to 55.78 flat in order for bears to make 10 points. And that's about right here. So you can see a lot of bears were willing to take the 10 points. I did not sell, but had I noted I probably would have taken a piece off probably at least half, around 10 points, because you still think that the bulls who buy below this are going to make money, which is why I have problems selling 8. The other thing is the risk. If you're selling below 8, the risk is huge now. You're probably risking, 30, 35 points if you're selling, and most traders really just don't want to risk that much in general. We're also near the moving average. So when you get a gap up, oftentimes the market will try to make some sort of double bottom or some sort of double top and then get a reverse down to the moving average, or some sort of wedge. Today we got a parabolic wedge, so it looked a little bit different, but some sort of wedge and then a reversal down to the moving average, which we ended up getting on bar 8. So we're basically at the moving average. It's notable we didn't touch it, but we're basically at the moving average at this point. And your risk is huge. And I think that the bulls who get back to this or who bought below this low are going to make money. So a lot of, reasons to hesitate to sell. And obviously there are reasons to sell. I suppose I'm not highlighting them as well because it is sell to close market and it's always in short. But I'm trying to highlight the issues with selling down here because it's very easy to just look at this and assume you got to sell and confuse it with, areas where you do actually have to sell. And then it destroys your confidence. This selling down here, this is a classic, selling below here and selling the close of this. This is a classic example of something that'll just destroy your confidence in this type of trade. And then when you're supposed to be doing it, you know, over here, you won't because this happened. So that's basically I'm trying to explain the problems with it to try and avoid that sort of thing. Bar 9, a big bull bar closing near its high. Can you buy above 9? I don't know. I'd probably rather wait. These are pretty big bear bars. I don't think that we're going a whole bunch lower. 9 to me confirms that we're in a trading range open, mainly because we got back below the one low or above the one low. But look how strong bar 9 is. It's a huge bar. It's 10 points and it's closing exactly on its high. This is obviously stronger than this, but to me, if this is what the first pullback looks like in your bear trend, it's not a very good bear trend. And it looks like to me, we're forming more of the bottom of a trading range. So when I think we're forming the bottom of a trading range, immediately you probably got to draw the trading range. Something like this. Ideally, you want to buy in the lower third. You didn't really have a chance, but it is also earlier in the day. And if it's earlier in the day, it's a little bit more okay to take a chance that, we're going to form the high or the low of the day. So, I would not buy above 9 though, because I think this is too strong and I want to see what the second leg down, sideways to down looks like. So I'd rather wait and get consecutive bull bars or a second reversal up, something like that. Disappointing follow through on bar 10, which isn't all that surprising because so many bears sold that bulls are going to hesitate to buy directly above this. They might buy a deep pullback of the bar, but I think in general, bulls are going to hesitate to buy above it. So the bulls think of this as a pullback. This is the start of their bull trend, or at least a trading range. They're assuming that if they buy here, anyone who's buying here probably has a pretty wide stop, and they're willing to buy more down here, betting that this is the start of a trading range. We might go a little bit lower, but they think that we're probably starting a trading range in here. So if we do go lower, we're going to come back up to here. So 10 is disappointing for the bulls, but it's relatively expected. The bears wanted a better second leg sideways to down. I don't think this qualifies as their second leg sideways to down. We should get back to this close. This was strong enough that I would imagine we're going to get back to this close at some point today. Bar 11, it's an inside bar. It's a high one buy for the bulls. So if you're a bull, this is your breakout, pull back, and then a high one buy. It's a credible buy. It is, more towards the middle third of the trading range. However, you can just take the buy and think that, maybe we'll break out to the upside of the 18 bar range. It's only bar 11. We haven't formed the 18 bar range yet, but you got to figure if we start to rally over the next couple of bars, it'll be a lot closer to bar 18 and we'll probably break out to the upside. It's early enough in the day that you can take a chance that something like that's going to happen. And 9 closes on its high and bar 11 closes on its high. So that's really good for the bulls. The bears want this to be a two-legged pullback. So first leg and then pullback and then second leg, bar 11. So they want some sort of, it would be more of a low 1 short, but you could argue it's a low 2, I think, since we got a reversal down on bar 10. But either way, I think that the channel up is reasonably tight, 9, 10, 11, and 9 and 11 are closing on their highs. So that's a big problem for the bears, even if they do get some sort of short setup. Also, we didn't touch the moving average. That's pretty strong for the bulls. The fact that they were able to hold the market above the moving average after this steep of a sell-off, the fact that we were not able to touch the moving average is really interesting to me. So I think that's a pretty good sign of strength for the bulls. 12, another bull bar closing near its high. You can buy the close at 12. Some bulls, they see this as big risk. They still think it's an overall trading range, right? It's reasonable because of how strong this is to assume that we're probably still in an overall trading range. And in trading ranges, what are the things that get tested? Well, off the top of my head, if you're buying here, you should be thinking about the bar 3 low is a magnet, the bar 5 low is a magnet, the bar 6 high is the sell climax high. You could argue this whole thing is a sell climax, and the close of bar 4 is going to be a magnet. It's a big bull bar, but I think the sell climax high, the bar 6 high, is probably going to be one of the magnets because this is where the sell climax started to me. This looked more like a pullback. But traders don't want to buy above 12 as much because there's big risk, so they look to buy a pullback of 12 during 13. They tried to get filled around the high of bar 11, most likely, because when you get good follow through like 12, they want to buy with more information around the same price. You can see the traders who tried to do that were never filled on bar 13. Bar 13, 3 straight bull bars closing near their highs. 9 is closing near its high, 11 is closing near its high, 12 is closing near its high, and 13 is closing near its high. So we have a lot of strong bull bars closing near their highs. We're probably going at least a little bit higher. However, you have to keep this in mind. Does it look like a bull trend? Yeah, it looks a lot like a bull trend, but you have to be thinking about this at the same time because we sold off so much, early in the day that to me, you still got to be thinking trading range, even though this is strong for the bulls. 14, a strong breakout. I would take profits up here because there's probably going to be sellers above the sell climax high. You have to ask yourself, if you were going to sell on a limit order up here, do you think you would get trapped? And the answer is probably not. So to me, this becomes more of a profit taking area because you need to see what do bulls need to see to buy? Well, either a pullback and a good looking high two, or they need a strong close above the high of the day. And you can see they were never able to get the strong close above the high of the day. Bar 15 is more follow through for the bulls. So we have 1, 2, 3, we have 5 straight bull bars closing near their highs. It's good for the bulls. We're probably going at least a little bit higher. However, I don't know. I don't know how much higher because, look, we didn't close above the bar 4 high. This is not a buy the close bar anymore. To me, I would rather wait until we get a close at a new high of the day. This looks like buying with huge risk at the top of the trading range. This does not look like buying a breakout to me. So while it is always in long and theoretical buy the close, I think this is a lot more of a profit taking area. And you just wait to see if we get a close above the high of the day. And then you can look to buy that or look to buy after consecutive bull bars closing near their highs above the high of the day. Again, these are really strong for the bulls, so I don't doubt that we might get it. But for me, I would just take profits somewhere up in here, maybe during 14 or the close of 14. And you don't really have to do anything on 15. Just wait and see if 16 can break out above and close on its high and not be too climactic. Or if we get a pullback and then a breakout above that closes on its high. And you can see it's a problem for the bulls that 16 was not even able to get to the new high. So now 16 bears outside down, double top with 4. Or I guess it would be a double top with 2 because it triggered on 4. Or sorry, 4 because it triggered on 5. So double top 4 and 15 because those both are the sell signal bars. However, if you're selling a double top based on 2 bull bars closing near their highs after a tight bull channel, about 30% of the time, the second leg up in a double top is a buy climax. But I don't think it's worth taking that chance here. 16 also has tails on both sides. So bulls might exit here, but overall, I don't think you need to look to sell. I think bulls probably willing to buy back around a 50% pullback, which you can see we got to essentially on bar 17. So 17 pull back to around 50%, and traders are willing to buy down here, expecting that they're going to get a second leg sideways to up from 11 to 15. Really strong looking spike, so it's going to get a second leg sideways to up. However, the pullback could be deep, so the traders buying down here around 50% are probably willing to scale in more. 18 sellers above 17 initially. You can see we tried to rally and then we pulled back and then we rallied again on 19. So what does that look like to you? It's a nested second leg trap, I think, on bar 19. If you go to, there's some time frame. I don't know. I didn't research it before, but there's some time frame where I'll just draw it out to if it's not making sense, where you can see that this is the pullback for the bears, and they're hoping that this has started some sort of bear trend, but they know there might be a correction. And what it looks like to me is bulls got 2 legs up, a rally on 18, and then a pullback on 18, and a rally on 19. This is 2 legs up. And this is the second leg trap up. And you can see it's really important that 19 was not able to break out above anything. If you're buying 19, you're just buying a big bull bar at the top of the trading range. It doesn't even close above the bar 15 high. It closes at the exact area where bulls sold last time, and it's a second leg trap. So bulls are probably going to sell again. You can't buy 19. If you wanted to buy 19, you probably needed it to at least close above the bar 4 high and be a breakout above something to increase the chances we're going higher. So let's just look at a 2-minute chart. Yeah, so here you go. 1, pull back, 2. So it's 2 legs up, nested second leg trap. So no reason to buy on 19, I don't think. And then 20, let me zoom this out a little bit so I can see the picture a little bit better. The bigger picture. Bar 20, a big bear bar closing near its low. It's good for the bears. The problem is it got really, really big. So, if you were a bear, you were hoping to sell a lot higher and get this as a potential high of the day. The problem would have been how tight this bull move up was. The downside might have been limited. However, 20 got so large that it undid, what most of this was doing. So when I see 20, what I think is, well, we're definitely going here because, I would say, 70% chance we're going here. Because this is such a strong spike to the downside that we're probably getting back to this area. Maybe it's more like 60, but I think, I wouldn't be surprised if it was I thought more like 70. And 80% chance we're going to get to the midpoint of this sell to close bar and this one. So I thought 80% chance we're going here, at least 60% chance we're going here, but it might have even been a little bit higher. But when traders see, first off, really good for the bears that 20 closes below the moving average. When traders see that where you're selling basically around the midpoint, a little bit below, although it does close below the moving average, some traders will hesitate and they would prefer to sell a 50% pullback of the bar instead because the risk is smaller and they're selling more towards the upper third. So you can see we actually went one tick above 50% pullback, and that's where there were sellers on 21. That's why there were sellers there, is because traders see how big this bar is, and instead of, think about it, instead of selling here with a 60% chance, let's just call it 60. I don't know. I think it's higher personally, but the overwhelming stat is when that Al has, in general, when you get a sell to close bar, 60% chance if you pull back, you're going to retest it. 80% chance you get between the midpoint of this bar and that bar. The next reasonable bear bar closing near its low. So let's call it 60%, right? That you're going to get back to here. If you're selling below bar 20, by the way, a good sell, it was still a good sell below bar 20, but I'm just trying to explain why it pulled back on 21. You're risking 17 points. And you might only be trying to make 13 or 14 points. So it's not as good as it could be. But if you wait and you try to sell a 50% pullback, yeah, your probability might be more like 50%. But now you're trying to make 21 points and you're only risking 9 points, and it's a 50%, probably more like a 50% probability when it triggers. So you're getting better than 2-to-1 on a reasonably probable trade. So that's why the selling to 50% here, when you get these huge bars, makes more sense for a lot of traders. So 21 is pulling back to the 50%. Bulls won a big high too, but I think 20 did enough damage that this is not a credible high too. It's also unable to close on its high, which is a big problem. 23, a bear bar closing near its low. You can sell below 23. At this point, we probably should not pull back. Spike, pull back, potentially a channel starting, so we shouldn't pull back to above the 21 high if this is going to be a reasonably good bear move. But 22, closing near its low, it's an okay sell to close bar. You can bet that we've seen the high of the day, and you're hoping the daily range is going to expand to the downside. 23, more follow through for the bears, so consecutive bear bars, 22 and 23. We're probably going at least a little bit lower. I would imagine we're going to at least test this close. And get a breakout below, and we'll see what ends up happening. This is a buy climax. This on its own is a buy climax, so we'll see what we get below the bottom of the range. 24, 3 straight bear bars closing near their lows. It's sell to close. It's always in short, but we do have a bit of a shrinking body on 24. We're still probably going lower, but at this point, your risk is large, so some traders might start to get out. And then 25, a disappointing tail. If you were selling down here, well, first off, it's big down, big up, and big gap up, and now we're back to big down, and the bull bars are closing strong, the bear bars are closing strong. Looks like big up, big down, probably confusing on the open. A lot of traders, though, they're going to give it a chance because they have a reasonably big profit, and they might take a piece off at the new low, but they're going to give at least a piece of their trade a chance to collapse down. And it's disappointing to those traders that 25 was not able to close at a new low. So what do those traders do? Well, during 26, they end up taking some profits, and that causes 26. It's not worth buying above 26, but to me, 26 signifies this is probably not a bear trend. You're hoping to get the bear trend, and then you can't get the close below the low of the day, and then you get a bull bar. This shows to me traders were disappointed we couldn't close below the low, and some of them are taking profits instead of holding and being hopeful of a bear trend. 27 trades down, but there are probably buyers below 26. It's a bad low one short. It is an inside bar, but it's a bad low one short. You'd imagine there are buyers below a bull bar closing reasonably near its high towards the bottom of the trading range. So that's what's causing the reversal up 27. And then an inside bar, 28. It's an IOI pattern. So inside bar, inside bar, 28. But I'm not buying above a bear bar. I'd rather wait and see what we get. And then you get a big bull bar closing near its high, 29. Had 29 triggered, it's probably a reasonable buy, but it's not really as ideal as it could be because of how steep this was. But it still would have been reasonable had it triggered. Instead, it did not trigger. You get an inside bar on 30. Do you buy above 30? I don't know. It's a high one, and it's low in the trading range, yes, but it's a bear bar. I'd probably rather wait and see what happens. We might get one more, we might end up getting a pullback here. This could be a spike, and bears, to me, it's 1 pullback, 2 pullback, some sort of wedge, and we're going to get a couple legs sideways to up. So this might be the first leg. We might get another one. But this is a disappointing bar on 31 for the bulls, I think. Do you sell 31? Maybe it's a swing trade. I assume it's a reasonable for a second. I think you can sell 31, but the risk is reasonably large. So it's not, like this, but it is a little bit large. So some traders might not. It's a low 2 short, but you're at the bottom of a trading range. So if you're taking a sell down here, it's really not as ideal as it could be. It's probably better to just wait for the breakout. Does the math over, 10 to 15 trades probably make sense to sell this for a swing trade? I think so. Because, we might end up getting a measured move down based on the height of this. somewhere down here back into the, this trading range and the prior day's close. And if you make that, even 3 times out of 10, you're going to make 25 points and you're risking 6 points. So let's call it, you're risking 6 points just for easy math, and you're gonna lose that 7 times. So that's a loss of 42 points, and you win 3 times. The 3 times you win, we'll call it 25 points. So you'd be losing 42 points and making 70 points. So I think, and that's 30%, which is probably pretty reasonable. So I think it's okay to sell, but I just don't think it's a very high probability trade. And it's probably better to just wait for follow through if you prefer a higher probability trade. 31, an outside bar closing near its high. It's good for the bulls. We're probably going at least a little bit higher, outside up, but I'm not sure how much. Again, we are in the lower third of the trading range. We might need to pull back a little bit first, though. This is not all that clear. We're probably going higher. You could argue 32 makes the market, somewhat always in long. This is a good looking bar and another good looking bar. So this might make the market always in long. And it's consecutive outside bars, 31, 32. So it's a credible buy above 32, betting on a measured move up somewhere up here. So actually, I'm changing my mind. I did not see that it was consecutive outside bars. I think it's definitely a reasonable buy above 32. I didn't mark it, but I did not realize it was an 00 pattern. And an 00, I think we're still in the lower third of the trading range at this point. So yeah, you're buying the exact lower third in 00 near the bottom of the trading range. I think that's a pretty smart thing to do, to buy above 32. It doesn't close above the moving average, which is disappointing, but sometimes, that'll happen in trading ranges where it's not quite perfect. 33 is disappointing, but I think if you bought, we're always in long, obey your stop. 34, a bull bar closing near its high. Some traders wait and see if we can get another bull bar closing near its high, which we do on 34, but again, not able to close strongly above 33. We're still in the lower third, and we've been going sideways for a while, so we might have to get a bit of a rally here. We have a couple pretty strong bull bars. 35, it's possibly a wedge, 1, 2, 3, so 29, 32, and 35, but it's not really worth taking anything, I think. It's a really small bar, which the bears have going for it, but I still think we're probably always long, and you're selling low in a trading range. So follow through 36 isn't as good as you wanted it to be, and then a reversal up 37. Reversal up on 37, a bull bar closing near its high. Again, you can buy. You're still buying in the lower third, and you could argue 32 is the breakout, and we're getting some sort of breakout pullback here. It's still relatively messy price action, but we're probably still always in long, and it's a bull bar closing relatively near its high above the moving average. 38, consecutive bull bars closing near their highs. There's a tail on 38, but it's okay to be long. You can see it closes above, this potential wedge, so maybe we get a measured move up somewhere around here. 39, more follow through. So we have 3 straight bull bars. This disappointing body, I think, a little bit, but still closing above the 38 high. We're always in long. We're probably going higher. The open of the day is always a magnet. And we have the bar 19 close. It wasn't a good idea to buy above bar 19 because of the nested second leg trap, but it's still a pretty big bull bar closing near its high. And there's some algorithms that might buy that with an uber wide stop and look to scale in. So maybe reasonable chance we get here or all the way back up here. I don't know. I don't think it's 60% chance we get back up here because it's not a very good buy. But I don't know, maybe 50. It's still a trading range. So even when you take terrible trades in trading ranges, you're usually relieved. Even if you sold below 31, and I assume if you scaled in below 35, it went to the midpoint. So it went to the exact. So not quite. You probably wouldn't have quite gotten out, and you would have actually gotten trapped there. But you can kind of see my point. So we probably will get somewhere between this bar and this bar, or potentially about all the way back up. 39, we traded below 39. Obviously, there's going to be buyers below 39. It's 3 straight bull bars closing relatively near their highs. We're probably going at least a little bit higher. And we get a bull bar closing near its high on bar 40. Can you buy above 40? Yep, it's still always in long. It's still probably by the close. We're probably going at least a little bit higher. Maybe at the top of the channel, maybe the 21 high. And then 41, a bull bar closing near its high. It's a good looking breakout with bulls. I still think we're probably going higher, but it's still the middle of a trading range, so you have to hesitate a little bit. And that's why there's hesitation on bar 42, a little bit disappointing. 43, a bull bar closing near its high. Yeah, we're always in long, and we've had a lot of straight bull closes. But I think if you're buying up here, your risk is rather large, so you're probably just looking for a scalp. Some traders, at this point, they'd rather buy below a bar than above a bar. So 44, another disappointing bar. It's possible we're forming or not disappointing, but it's a pause bar. It's possible we're forming some sort of parabolic wedge. 41, and then pause, and then 43, and then pause, and then 45. So 44 we traded below, but nothing to sell. Bulls are going to buy below for a second leg sideways to up. We're so close to this magnet, the 19 close, we might have to get there. So some bulls will buy below, betting buyers within a couple of bars, and they're trying to make, it's not a coincidence that's exactly a 5-point scalp, by the way. Basically buying below 44, 44 low to the 19 high is a 5-point scalp. That's not a coincidence. That's the algorithms creating trades. So outside up bar on 44, but a tail on the top. This looks more like a channel at this point. I'd probably be done buying. Like I said, this is going to be more of a profit taking area. I'm done. I'm not really trusting any more breakouts for most of the rest of the day. To me, this is going to be a trading range day. 46, a bull bar closing somewhat near its high, but a little bit disappointing, or sorry, not disappointing. Bull bar closing somewhat near its high, but the location is not very good. You're buying very high. Probably buyers below, like we do get on 47 for a second leg sideways to up from this, but I don't know how much higher we're going. You can see on 48, we end up getting sellers. Do I sell below 48? I probably would not sell below 48. Yes, it's the top of the trading range, but this is a little bit too much to sell against. It's okay to buy in here because we had a credible, a good looking reversal bar here. And so after this, you might start to look to sell. And we never quite got a big reversal back down, but you can understand the point. So to me, we're getting into the sell zone. So not worth selling below 48. Below 48, you can see we got a climactic bar 49. Closes above all of this, but let's see the follow through. If 50 is another big bull bar, maybe you can buy. But in the short term, we're probably a little bit overbought. 51, a low one short. So we have a bear bar and then a low one short on 51. Am I selling below 51? I probably would not. I think that, it's a low one short, and you can argue it's a big trading range, but this is just really strong. So it's kind of hard to take this reversal. If we get another credible reversal down, you can. Or if you want to sell 51 and put a stop, probably a measure move up. So maybe somewhere up here, and then you sell more here. If you can do that, then I think it's okay to do. But other than that, I probably would rather wait. So if you do sell below 51, you have to be expecting something disappointing on 52, which you do get an outside up bar, but a big tail on the top and a tail on the bottom. An inside bar 53. So again, we're probably going to start to go pretty sideways here. At this point, I need a really strong looking bull breakout or some sort of reasonable bear bar that I feel like I'm selling high enough in the range. This is forming a tight trading range. You can see 53, 54, 55, 3 straight doji bars. So you should now think of this as a tight trading range. So you not only want to sell high in this overall range, but you want to sell high in the tight trading range as well. So if 57 closes on its low, you can probably sell it still for a swing, but you probably want to sell reversals down from failed breakouts above the tight trading range rather than selling low in said tight trading range. So, 3 doji bars. Again, we're just waiting on a breakout at this point. Outside up 56, but a big tail on the top, unable to close at the new high. Really, again, we're in breakout mode. That's really the important thing to know here. 57, if it closes on its low, it's a double top, a higher high double top, and bears might sell it, but we haven't closed below moving average in a while, so I'm not all that sure. 58, a bull bar closing near its high. Do you buy above 58? I would not. I would rather wait. You might be able to because we've been always in long, but to me, you're buying high in a tight trading range. I'd rather wait for the breakout. 59 is the breakout, but I don't know. This just isn't all that convincing. There's a big tail on 59, and it overlaps 58 a lot. It's probably not wrong to buy above 59. But you can see it never triggers, and we get a bear bar closing near its low on 60. I think bears wanted 60 to be an inside bar and a bit smaller so that they could sell with less risk, and they could sell, a failed breakout above the tight trading range and hope to get a breakout back below. If you think about it, this is the spike, and then, the start of the channel is basically here, like around here. You could argue it's down here, but if you're just using bodies, it would be here. You have to be flexible with your definition. So if it had tested back down here, I would call this the start of the channel, but it's notable that 67 just ended up testing the 48 close essentially, which you could argue is the lowest close of this channel. So you have to be flexible with your definitions. So 60 not able to stay an inside bar is disappointing for the bears. A reversal up 61, a bull bar closing near its high. Am I buying above 61? Well, it traded above 60, so 60 is now your signal bar. So that's not that good. And I would not buy above 61. This is a classic example, of one of those trades where it's late in the day, and if you're down, you're kind of tired, and your brain's probably a little foggy, and you think, well, maybe I'll make it back on this trade. But it's a terrible mentality. You're buying right at the high of this channel, right? So this is a channel. This is not really a strong bull trend. It's just more of a channel, which is going to end up being a bear flag. You're buying with big risk high in that, and the 60 high is you're closing at the 60 high, not above it. we need, consecutive bull bars closing near their highs. So you're probably thinking to yourself, buying above 61. The bulls just need one more bar that looks like 61 and I'll make a lot of money. And you're probably right. So just wait for that bar. Wait to see if 62 can close on its high. And if it can, then great, you buy. You probably will make money if 62 looks like 61. So it's better to just wait for the follow through. And, every once in a while, 62 will be a huge bar and you'll miss out on money, but you're going to lose far more money taking this trade than you're going to make by taking it. So it doesn't make sense to buy above here. It's better to just wait. 63, an inside bar. Disappointing follow through 62 first off. So bulls still need another good bull bar, but even then, this is a pause bar. You don't want a pause bar in this context, I don't think. You want the market to go up very strongly and break far above this channel. Kind of like we got a tight channel up here, and this is a dramatic breakout above it. Channel up here is weaker, so you need a really dramatic breakout. You're not getting it. 64, a bear bar closing near its low. It's an inside pattern, so consecutive inside bars. It's reasonable to be short. Basically, just betting on a test down. It's going to be a minor reversal. There's too much buying in here, but it's probably going to be a minor reversal. But it's an II. It's a credible sell. And you can see we end up rallying a little bit on 65. Not as many sellers below, but we're never able to trade above 65. So why? Well, first off, if you sell below 64, your stop is at least above 63. Why aren't we able to trade above it? Well, sometimes bears, they'll sell with even less risk. So they'll just sell the close of 65, betting that we're not going to trade above here. And they risk, I don't know, 3 ticks, and they're trying to make, whatever they could make, right? When you see 66 closing on its low, they're probably able to make like 10 points. And so, you're not going to win that trade very often, but the times you do, it'll more than offset the times you don't. 66, a bear bar closing near its low. It's a credible short, but again, it's probably a minor reversal, just scalp with 5 points. Probably not expecting a huge bear trend here. We're just testing back in towards the bottom of the channel and forming a trading range. And then an inside bar, a high 1, a bad low 1. We're getting into barbed wire territory, and we've started to go sideways towards the end of the day. I think it's better to be done and not trade. For stop orders on the day, I thought you could sell below 6 for a possible high of the day, but the risk is big. You could sell the close of 7, but like I mentioned, I thought that the bulls who got below 1 were going to make money. So it's hard to be selling down here, I think. And the risk is huge, and you're getting near the moving average. I personally would not buy above 9. It's low probability. I'd rather wait till this gets some sort of second leg, or at least we get a pullback from here. If you're buying above 9, you have to you're very likely, probably at least 70% chance you're going to sit through some sort of pullback. So you're probably not going to get strong consecutive bull bars. So disappointment is not surprising here on bar 10. 11 is buy the close. It's an inside bar, high 1. You can just buy, taking a chance we start to rally and basically get back up in this area or this area. And then buy the close, technically buy the close, but getting difficult. I would not buy these closes. I'd wait for a breakout. You could sell below 20 or sell the 50% pullback. It was a good limiter or trade, I suppose. Probably sell below 21. You could probably sell 24, but it's getting low in the range. The 00 is credible. I suppose 31 if you're swinging it, but probably just better to see what happens. Outside bar 32, you can buy. I wouldn't sell. This is just trying to trap. This looks more like it's trying to trap bulls out than anything else. You can buy above 37. It's a credible high 1 buy, taking a chance that we start to rally a little bit here and you get a breakout above basically this wedge attempt, and we get a breakout above and a measure move up. 38, 39, 40, you can buy any of those. And 41 is buy the close, but it's hard to do because you're buying high in the trading range. And then it's still buy the close all the way up, but difficult. If you can use wide stops and scale in, it's probably okay to start selling in here, betting on a trading range and not a bull trend because it's been a trading range day. And other than that, 64 or 66, getting back into this area. On the daily chart, yes, reversal up, but minor reversal. This is going to get a second leg sideways to down. How high up do we go? I don't know. I think the swing point, the start of the swing bar, the 717 low, is going to be a magnet. So when we get to this low, look for a little bit of resistance. The traders who did not take the initial sell, trying to get back in after getting more information. So if we get back to this low, I'd look for sellers. Do I think we get back to this low, the 716 low on this reversal attempt up? Probably not. I think we'll probably start to go more sideways first. The weekly chart is interesting. The bears, well, they want to make a bear bar as possible, but really it's most likely, you can see yesterday's or last week's low, 615, and we got close to it today. We got to it today. Okay. So that was basically the high of the day, was last week's low. And we're probably going to get some sort of second leg down from this. If bears can get an inside bar, a low one closing near its low, they're hoping that this is the start of a bear trend and they're selling a low one in that area. So if this is the start of the bear trend and an inside bar closing near its low, it'd be a low one. The bulls want a bull bar closing near its high, forming an IOI pattern with the past 2 weeks and potentially to start a rally. The monthly chart, bears really want a bear close. I'm not sure what it's going to look like, but we might end up getting it. I occasionally talk about stocks. I think this one's interesting. It's not bullish. The price action isn't bullish, but the value seems to make sense. I thought that with how far we are below the moving average on this stock, I thought most likely we're going to fill in this gap. Obviously, this is a huge bear trend, and it's difficult to bet against that. But if we go bear bar, bull bar, bear bar, bull bar, bear bar, then by that logic, July should probably be a bull bar. And again, this, they may go bankrupt. They might, I don't know. But it's definitely possible that the stock at least doubles. I don't know if I'd go for the full double, but again, I think that this gap should fill in. So most likely, again, you can bet against stocks going bankrupt. But I personally, in my opinion, think that this is probably going to bounce. I don't know what it's going to look like. I don't know how high it's going to go. But I assume at least back into this area and potentially back into this area. But all right, that's the day.